Owning your dream home here in Kenya is everyone's dream, but unfortunately, not many are able to actualize this dream because of lack of finances. In this video, we are going to discuss about available financial options that are available for anyone who wants to build. So today in my video, I'm accompanied by my friend. He's a project manager by profession, CPM Mwangi from Brickfest Constructions. And today we will be able to discuss about the financial options that are available that maybe we do not know. So welcome in this video and let's learn together. Welcome, Patrick.
Oh, thank you, Joan. Thank you. My name is Patrick, project manager, and we are consultants, design and consultants. Let's check our page, website www. So this is a very interesting topic. It is divided into three elements. We have the sources of finance, we have the requirements, and our roles now, specifically as personally me as the consultant, Joan as the contractor by Instinct company. So I will speak in the aspect of banks, and because actually that is very common, for a while. So circles are taking over, and we also have mortgages. Now in banks, there is a mortgage and there is a construction loan. Those are two different things. And I will be speaking about construction loans. As per the norm, you can just take a loan. You can take a loan normally to finance your business, and with the carrying rate, currently is 16%. To just take, depending on your bank statements for the last year or 6 months, and also other issues like pensions or other books of accounts that are required for the. Some also require emphasis. Now, when we get to the financing, if you go to a bank in the name of building, in the name of funding a startup, in the name of something like development, they won't charge you like a normal person giving a loan, because it's more of, is even part of the customer appreciation that you stand with the customer. Actually, some banks like NCBA, depending on the arrangement, they can even finance your project by 105%. So, where these loans, you can quickly access them. ACB offers of the construction loan, equity offers, NCB offers. Can't say much about the rest since I've not dealt with them. Interest, you can agree, but see, in the meantime, we must also be having the drawings done by registered professionals, architects, engineer, duly drawn and stamped, actually also approved by relevant agencies. Also, bills of quantity by the quantity surveyor, duly also stamped by the professional, and some also require title deeds that matter, proof of ownership, that you start your construction. And this is a very interesting process, because as a consultant, you find that a bank is a very big entity. Now, when I get in there, because there are those loaning officers, like, you get to interact with the word that you have this client, so on and so forth, so that you're facilitated easier. So Us as consultants, we play a role in the convenience for that, for better facilitation, that you get to trust us with all the due process immediately after the consultancy bit, and we facilitate the process. So my colleague Joan will be taking over to share about the circles and the corporate.
Oh, thank you for that elaborate explanation about construction loans that are offered at the banks. So I'm going to talk about the circles. Circles take circles have the most percentage of those people who take these loans. Most 90% of those who take loans comes from circles. And what are the requirements that are needed from the circle in order for them to give you a loan? One, you have to be a member of specific circle. So you have to identify a circle, be a member. There's a membership fee that is usually paid. You have to be saving with this circle for maybe a period of more than 6 months. And for you to get this loan, to you have to have a security in form of a guarantor or a collateral, that's a logbook or a title. And most of these circles can multiply your savings by 3 times more. So in case you had saved like 1 million, they are able to give you 3 million, and that you can build a bungalow, maybe a 3-bedroom bungalow. You can come to us for a quotation and see whether the amount that you can be granted for by your circle is really enough for you to complete a project. So that's how basically circles work. The circles I know from my side, most are offering an interest rate of 1.2% monthly on reducing balance. So in case you have a problem on identify a circle that maybe you would like to start saving on, you can consult us for more options. Also going to tackle about mortgages. Mortgages are offered in banks, and the banks I've consulted with currently, the rate is at 18%. 18% for the mortgages. Many mortgages can last up to a period of 25 years. You can choose maybe yours to take for 10 years. It will depend with the bank. And the longer the mortgage stays, the longer the interest you will pay. So it's advisable if you're taking a mortgage, you reduce your payment period to maybe around 10 years. That won't be too much expensive. And again, with the long repayment periods of mortgages, there is the advantage of it, because you won't be paying a lot of monthly payments to these banks. You will have more money that will remain into your account that you can maybe invest in other businesses as you take your long period of time for payments. Actually, at long last, after maybe the 25 years, you'll have something to show compared to maybe a person who had paying rent the same amount of money that you're paying your mortgage. At the end of 25 years, the person will have nothing to show. But as for you, you will have your own house that maybe you will be staying with your family, and maybe even also in old age, you'll have somewhere to relax very well. So if you're energetic, this period you're energetic, it's good to save on these loans. They're not, if you get a good plan with a good bank, and that's what we are trying to educate, it can be a good investment. I'm also going to tackle about the Kenya Mortgage Reinsurance Company. This institution was initiated by the Central Bank of Kenya, the Treasury, together with some few partners. So they are private partners in the central bank. So these guys are offering these loans, construction loans, to banks at a rate of 5%. And at this rate of 5%, they are supposed to issue these loans at a rate that is less than 10% to some banks. I have consulted some banks, and they are offering these loans at 9.9%, one bank, and another bank is offering it at 9%. So if you walk into any bank and tell them that you need a Kenya Mortgage Reinsurance company loan, they will avail this loan to you at an interest less than 10%. So walk into any bank, they will tell you more about this loan, if you qualify, how much you're supposed to be paying per every month, if that amount is really okay with you. All this will be explained to you. And as I said earlier, if you have any problems regarding these loan applications, you can always contact us via our contact information. So these banks will really look at many things from you. One, they will look at your age, they will look at your bank statements, they will also look at your disposable income so that they are able to see if the amount that you'll be paying monthly is really comfortable with you. Maybe you have a question on how a consultant and how a contractor are able to help you to ensure that the project in which you have acquired loan on it's achieved within the right budget. If it was 8 million, your project will be completed within 8 million. If your project is within time, that if you are supposed to take 8 months to complete your project, how are we able to help in that your project will be completed within that time and within the right quality? So to you, Patrick, can you just elaborate to maybe anyone who may not be knowing on how a consultant or and a contractor are able to help a client after the loan is issued?
That's an interesting concern because what you have to understand is, especially for mortgages, the bank financing a project is very different than you using your savings. And by that I mean, if you take like Joan for example, as just 2 million or by herself that is intending to erect a bungalow, I have nothing but I have 2 million loan or mortgage for that matter, put up a bungalow. How we will be remitting the payment, monthly payments or other matters involving the money is slightly different than how I will do it because I'm under the influence of the bank. By that I mean, there are contracts. There is the period that you agree to do evaluations. There is the performance bond and all that other matters that are see time. Now, depending first on the arrangement, is the one that you can just take a loan. You'll find your ways, especially for those doing houses. You know, your house is not exactly an investment because if you are building a mansion to live in, at the end of the day, you're just living. There's nothing bringing onto the table for you. But for those doing retail outlets, something commercial, you can agree that the bank develops, then it from the monthly income you get takes a particular deduction, which is okay. So those are some of the issues that you have to also check on. And us as the me as the consultant, as the contractor, we coordinate in all perspectives because you see, the contractor must have a strong agreement with the bank regarding to how he will be paid. I will have to be on course on how I do all the financial documents at all times, so that at the end of the day, serve in the best interest of the client. So coordination is very important for all aspects, especially the contractor to the bank, because personally, you see, the bank now is actually serving in your capacity as the client. So you are reporting to the bank. And those guys also, they have the loan department has construction professionals, guys who can come on site and check if you are submitting a particular valuation. They come and cross check if you said you have done a full walling, check if it's a good full, if it's casting of the slab, we check. So those are avenues that can be aware of.
Something we prepare as contractors, something called disbursement schedule. So with the disbursement schedule, that's what the bank uses to release these funds. If you had taken, for example, the RMC, the reinsurance mortgage loan, the 8 million, 8 million won't be given to you in lump sum. They have to release this money in stages. And what do we talk about stages? According to the milestone. We usually divide our projects into milestone. If it's foundation, when the foundation is complete, that money is released. If it's walling and the ground floor is complete, that amount will be disbursed to the contractor by the bank. So there's no time that will come that the bank has released all amount of money and your project is not complete. No, that won't happen if you choose the right way. We have come to the end of our video today. Thank you so much for watching, and remember to contact us at Inscape Enterprise Limited. We are located here at Watermark Business Center, that is here at Karen and Dege Road. Thank you so much. Please consider subscribing for those who have not subscribed, and also turning on your notification bell so that in case we have a new video, you'll be able to be notified that you would be left behind. So thank you.
Yeah, thank you for that, Joan, host. So also for further inquiries, you can interact with me via info@first.co.k, number 07229065. We are also at the Watermark Business Park. So she's actually my neighbor. Serve you here, serves you over there. Thank you.